All right, let's kick things off with the oil markets. We saw Brent crude falling below $70 a barrel yesterday, recovered just a bit to 70, but then in early trading, falling back there, $69, not seen since December of 2021, so 3-year low there. Same thing with West Texas Intermediate, that's North American grade, $66.31 in early trading, also testing a 3-year low. And as a reminder, Nigeria's benchmark for the 2024 budget at $77.96 a barrel. So as far as the performance of oil so far this year, double-digit declines for both. Brent crude down by 10.2% year to date. West Texas Intermediate down by 8.2%. Even natural gas down by about 11. Now let's look at what OPEC Plus put out in their latest forecast, which actually weighed on prices. Second forecast done since August, so August and September. They're now seeing 2 million barrels per day of demand in 2024. That's lower by about 80,000 barrels. And also for 2025, 1.7 million barrels per day, lower by about 40,000 barrels from their previous forecast. So let's jump into it. We're incredibly happy to have Dr. Christian Ebeke, who is the IMF Resident Representative for Nigeria. Dr. Ebeke, it's great to have you again. Thank you so much for being with us. Good morning.
Good morning, Otis.
The oil dynamic, what do you make of it all? And I guess it's two sides, so the oil producers and then those who are non-oil producers. How do you see all this working out?
No, thank you, Otis. This is a great question, and thanks again for having me on your show. It's not uncommon to have swings in international commodity prices. Oil is one of the key commodity, so it's not uncommon. You know, the impact can come from demand and supply imbalances, risk, sentiment factors, etc. We'll be looking closely at this particular development that you mentioned in our upcoming World Economic Outlook publication, where we will be revising our projections for major commodity prices, but also the world economy in general. We will be looking at the potential impact of this. So it's going to be published in October. We can always discuss that when the report is published. But when it comes to Nigeria and the potential impact that an oil price decline can have on the economy, is very, very important to take into account several factors. Nigeria is exposed to those swings because of the high concentration of exports into hydrocarbon products. Nigeria is a large oil-producing country, so clearly a protracted decline in oil prices will have adverse consequences on the external position of the country, but also potentially impact on the revenue, on the fiscal front. But again, as macroeconomists, the way we look at it is we try to see if the shock is more protracted or is temporary. We also look at whether the country has a certain situation in terms of initial conditions, the macro situation of the country. But for Nigeria, again, this exposure to those terms of trade shocks brings into question the level of economic diversification in the country. So for Nigeria, it's very, very important to continue those long-term efforts to diversify away from hydrocarbon products. But also, when you have buffers, you should use them. So building buffers to, again, meet this type of shocks and address this type of shock is very important. So for Nigeria, clearly, this is a situation that has potential impact on both, the trade balance, but also on the fiscal front. But it's maybe too early to call. We will be assessing this at the global level in our upcoming publication. I
am very much looking forward to that publication when it comes out in October. That's Christmas coming early for us. Okay, so I'm glad you mentioned that Nigeria, oil producing nation. We haven't produced petrol in about 28 years, and now we finally have the Dangote Refinery producing petrol, made headlines everywhere. We've been covering it. So I have to, of course, ask you, since we have the opportunity to speak to you, what do you make of this milestone, I guess, for the country to be able to produce this now?
I think the fact that Nigeria now is going to produce refined petroleum product is a major achievement. This is a significant development for the country, but it also talks about the great potential of Nigeria in general, right? So this is definitely a major achievement, and again, a great potential that is on display here. Now, when we have to talk about the new refinery, we have to note that this is a very large infrastructure, right? With a great potential. The size is very, very large. So the macroeconomic implication of this are, we see a lot of potential benefits for the country. One is that the fuel scarcity issue can be addressed if this refinery and the other refinery that we understand are expected to also resume activity soon, will provide the country with enough petrol supply so that scarcity can be addressed. The second benefit of this major investment is that Nigeria can become a major exporter of petroleum products. So this is what we call moving up the value chain, so adding value to the type of exports that you do. And clearly, this also provides meaningful job opportunities for Nigerians. This can have positive spillovers into the Nigerian economy. But one important point, this new refinery has started activities. Additional refineries hopefully will come soon. Those refineries will need enough crude supply to function. So all the efforts that are being made now by the administration to really increase crude production, dealing with the issue of security around the pipeline, etc. This is all very important and timely. For the whole framework and this potential to be tapped fully, enough crude supply needs to be offered to those refineries for the impact to be meaningful, as we discussed.
Thank you for that. Another, of course, while that was happening, there was also a revision upwards of fuel prices here in Nigeria. That, of course, also making a lot of headlines on the social front, on the economic front. What do you make of this latest revision upward of pump prices here at home?
Yes, I think this upward adjustment to petrol price at the pump comes at a time where Nigerians are already feeling, significant hardship. There is a lot of pain for Nigerians coming from multiple shocks and compounded shocks. High inflation, high food inflation. Now the country is dealing with devastating floods. The images that we see, for example, from Maiduguri, show you how challenging the situation is for, an average Nigerian. So the upward adjustment to pump price comes at that particular moment where the economy is also, dealing with multiple shocks and Nigerians are feeling this pain. Our advice that we clearly stated in our annual economy review of the Nigerian economy that we published in May, our advice is very clear. It's important to strengthen social protection in Nigeria. It's important to, accelerate the mechanism and the disbursement of this support to the most vulnerable so that they can cope with the multiple shocks that they are actually facing now. So this program that the federal government has, together with the World Bank, reaching out to 15 million households, this is the way to go. This program should be accelerated so that the impact of these policy adjustments, cushioning the impact on the most vulnerable is the immediate priority.
Thanks for that. Now, the thing is, even with where prices are, there is also the discussion of market forces, demand and supply, and then, whether or not this is where they will stick. We had NNPC representative, that's the National Petroleum Company Limited, which is a limited liability company now, on the, I think it was the morning show, of course, last week. And he said that these current prices are not reflective. So let's take a listen to what he said.
Well, I can't tell you, what I can tell you simply is that the pump price today is still not market reflective. So if we are, and we should be moving towards market reflective pump prices so the competition can kick in. NNPC is the sole provider of PMS in the country today, and that is abnormal. We should have a situation where everyone who is in the business is able to bring in PMS and sell, and then the consumers get the best situation.
All right, so that, of course, also making a whole lot of headlines, I guess. So yeah, so based on your answer from the last question, knowing that those prices are not, not market reflective, what do you make of that update with that regard?
Again, I think the starting point should be to ensure that there is enough supply stability of this product, right? The queues that we see at gas stations, this is definitely something that needs to be addressed. We also understand that for a long time, price at the pump has not been reflective of market conditions, and this led to challenges into petrol supply and challenging situation also for NNPC. So our position again is, while you're doing these adjustments, it's very, very important to be mindful of the potential impact that this has on the most vulnerable. So again, the narrative should really be about how to accelerate support to the most vulnerable so that they can cope with this type of shock. Now, if this upward adjustment brings enough supply in the market and help address fuel scarcity, this will be a very, very good development for many Nigerians, because again, the scarcity is not really helping the productive capacity of the country, but also people normally in their daily life.
Now, there was after, of course, the Dangote Refinery started producing petroleum, the question of whether or not the NNPC would be the sole buyer of petrol for that. You heard from the representative saying that's not supposed to be the case. And so they did put out a press release stating that there should be a willing buyer, willing seller model with respect to selling of petroleum from the refinery. What do you make of that update there with respect to what they put out?
I think for the consumers, availability of supply, competition, those are principles that usually work in favor of the consumers. Those bring, good product quality when you have competition. And when you have competition also, you ensure that there will be a stability of the supply on the market. So again, everything that works in the favor of those principles is something that we will welcome. The market should be a market where, the two principles that I just mentioned are clearly achieved. Stability in the supply, but also competition to ensure that consumers can have the best deal and the best bargain here.
Now, in today's This Day newspaper, Nigeria's newspaper of record, there is, of course, comments from President Tinubu reiterating his stance that the need to remove fuel subsidies was necessary in order to channel funds towards critical infrastructure and other matters. He was represented by Vice President Shetima at a gathering. I want you to take a listen to what the Vice President said on behalf of the President.
Nigeria's economic story is one of resilience, determination, and gradual recovery. Despite the global challenges, including the aftermath of the COVID-19 pandemic, geopolitical tensions, and inflationary pressures, our nation continues to press forward. Our GDP growth recorded at 3.19% in the second quarter of 2024 reflects our commitment to laying the foundation for long-term stability and prosperity. The services and industrial sectors have been key drivers of this growth, showing that our economy is diversifying. Your Excellencies, distinguished ladies and gentlemen, as a government, we have recognized the challenges and are deploying several initiatives towards addressing them. Some of these include macroeconomic stabilization measures. We have taken bold steps to reform the macroeconomic environment. Our focus is on restoring confidence in the Nigerian economy through measures aimed at reducing inflation, stabilizing foreign exchange market, and improving fiscal management. Though painful in the short term, the removal of fuel subsidies is designed to free up budgetary resources for critical investments in infrastructure and social services, and frequent adjustment of the monetary policy rate, a move aimed at curbing inflation and fostering a more market-oriented exchange rate system.
Now, that was at the 17th Annual Chartered Institute of Bankers of Nigeria Conference in Abuja. So what do you make of what we just heard?
So, Rotos, if you followed my explanation so far, you will hear a constant topic and theme here, which is about how you balance policies. When it comes to these type of challenging reforms, you have to look at them as packages. You have a package where the first leg is having a clear mechanism to discuss or implement a price modulation for this type of product like petrol. But you don't do it just alone. Then you have to blend this first pillar with another one, which is definitely how do you cushion the impact on the most vulnerable. So the price adjustments, any effort that you're doing to resolve a balance sheet problem, you accompany this with something that is meaningful to the people. So that's why we see this as package of policies, and our recommendation in our annual economic review of the Nigerian economy in May clearly stated that those policies should be implemented as packages. So you have this price modulation that you can design and have a clear and transparent framework for price determination for petroleum price at the pump, but also having a robust social safety net program or a mix of programs that target the most vulnerable so that they can really cope with the multiple shocks that they face now.
All right, thank you so much. I think that rounds off our fuel discussion. We can move on to fixed income now and bonds. Also front page of today's This Day newspaper. The US dollar domestic bond did get oversubscribed. Just to go over a couple details. 500 million is what they're looking to raise. They got $900 million, 1.8x oversubscription, 9.75% coupon over 5 years. And Wale Edu, Minister of Finance, said the proceeds will be used for critical infrastructure. We've got a couple quotes from the Minister of Finance and also the Director General of the Debt Management Office. We'll get the Minister first. The issuance of this inaugural domestic FGN Federal Government of Nigeria US dollar bond demonstrates that investors as well as Nigerians continue to have faith in the country's economy. And then going to Patience Oniha, who is the Director General of the Debt Management Office, she also talked about the collaboration that got this together, saying that this transaction was made possible through the expertise and guidance of advisors. And also appreciate the continued support of the Nigerian public and institutional partners who contributed to the successful completion of the issuance. So, well, I guess, I'm just throwing all the updates at you. What do you make of the bond issuance and I guess the investor reaction? What your comments so far, I guess?
Again, as you said, and as has been reported, the issuance was oversubscribed. I think my understanding is that initially the administration wanted to start with the first round of around 500 million. The target is 2 billion. From what is being reported, they raised 900 million, so oversubscribed. So there was appetite for the product. We will be assessing the implication of this auction and the results, and we will be looking closely at different factors. For example, what was the investor base, what was the share of institutional investors here, retail investors, etc. And we'll be also looking at how this, is in the mix and is financing the budget. Clearly, this was one of the financing strategy for the 2024 budget, and we will be looking closely at that. In many other countries where these type of auctions were implemented, they also had to manage additional risk coming from this. We flagged in our report published in May that one risk could be that this type of bond, for example, can have an impact on other Naira-denominated security and segment the market. So this is a risk that the administration can look closely at and try to manage.
Thank you so much. Also in the news, China. We had the Forum on China-Africa Cooperation Summit, where President Xi Jinping pledged more financing to African nations. I think it was $51 billion over the next 3 years. That's right. And he vowed for 3 times more infrastructure support. There's also delegates apparently voted on a China-Africa action plan that stretches till 2027. They're also seeking an Africa ratings agency. Dr. Christian, there's a talk of how China wants to support Africa, which is well known. But then there's the other side that suggests, could Africa be a pawn in a power play between, the U.S. and China? What do you make of all as far as the outcome of this forum that we just saw in China?
I think for a country like Nigeria with huge potential, and I think you will agree with me that Nigeria has an untapped potential still, and tremendous opportunities to grow and also to trade and do business with many, many other partners around the world. So for a country like Nigeria with this huge potential, FDI, foreign direct investment, inflows in Nigeria are good. They are good for growth. if they really go into productive sectors and add value to the Nigerian economy. So again, where these FDIs are coming from is really secondary. What is really important is really to strengthen the attractiveness of the Nigerian economy, ease the cost of doing business, making sure that macroeconomic stability is restored, to make sure that the productive capital inflows come into Nigeria and really, really help also contribute to shape this beautiful country and very, very large economy that has this huge potential. So again, Nigeria should be open. Nigeria is open. The financial account is open. Nigeria is large trading partners with many other countries, and attracting productive capital, productive investment into Nigeria is the way to go.
All right, so I really appreciate your time. You've touched on so much today. I guess just we got 1 quarter left in 2024. It's been an eventful year, to say the least. So, and of course, we're going to look forward to your report, the IMF report coming in October. But how have you assessed the year so far? What's your outlook for 2024? How have you seen things for Nigeria and so on?
I think, maybe 3 points here. First, the authorities have an ambitious plan to transform the economy, restore macro stability, promote growth, and really deal with poverty. This is the ambition. They have clearly stated it. It's an impressive and very ambitious plan that they have. Meanwhile, there is also a recognition that there is significant hardship in Nigeria. The population has to deal with multiple shocks, and those shocks are not just one after the other, they're also compounded. So clearly there is a need right now to continue all the efforts to really reach out to the most vulnerable and ensure that while the reforms are being rolled out, those vulnerables can really be reached out to, and the administration can help them cope with the challenging situation that they face. And I think programs like the one that the federal government has, reaching out to 15 million households, providing direct payments, supporting with CNG buses plans that hopefully will be implemented soon, and additional plans, providing grains, using strategic, agricultural reserves to reach out. This is very important, and those type of initiatives should be accelerated to ease the pain on Nigerians. Now, going forward, one of the key issues for Nigeria has always been the revenue part, right? You can have all the plans, but how do you finance those plans? So raising revenue in a country that has one of the lowest revenue to GDP ratio in the world is one of the ultimate priority also from now and also in the medium term. So again, why revenues are important? Because you will use them to promote more infrastructure, more development spending, more health, more education spending. So that's how we see the type of challenges, but also opportunities for the Nigerian economy. Now, for the remaining part of the year, one of the key I would say milestone or something you can put in the calendar is really the 2025 budget, right? This budget will also set the stage for, what would be the priorities for the administration for 2025, given all the challenges, and also how to create the opportunities to really ensure that macro stability is restored and also growth is really promoted going forward.
Dr. Christian Ebeke, IMF Resident Representative for Nigeria, it is always a pleasure having you on the show to just share your knowledge in all these matters. Thank you so much for your time, and we look forward to maybe seeing you again in October to talk about your report. Thank you so much.